Welcome to our Life Insurance 101. This is a great overview for anyone who may be interested in purchasing coverage but isn't sure what kind to get, how companies compare, or the amount of coverage they might need. Today we'll go over what is life insurance, how much it costs, the different kinds of life insurance, living benefits riders, how to pick a good company, vetting insurance agents, and how they get paid. But first, a little information about myself. Okay, what is life insurance? A life insurance policy is a contract with an insurance company where, in exchange for premium payments by you, the insurance company provides a monthly, annual, or lump sum payment known as a death benefit to beneficiaries upon the insured's death. Keep in mind that the cost and availability of life insurance depends on factors such as age, health, the type, and amount of insurance purchased. Before implementing a strategy involving life insurance, it's important to make sure that you are insurable. Insurable interest. It's defined as the reasonable concern of a person to obtain insurance for any individual or property against unforeseen events such as death, losses, etc. To put it plainly, it's the amount of insurance required to satisfy any debt or obligation the insured is responsible for. For example, if you have a $400,000 home mortgage debt, then $400,000 is your insurable interest. You can use the same principle on any members of your family or business partners as well. Like if you want a death benefit for $1 million to go to your child if you were to pass on, then $1 million is your insurable interest. Make sure that you have this dollar figure decided on before shopping around for life insurance, and never let any insurance agent try to convince you that you need more insurance than you actually need. They might be more concerned with getting a higher commission than servicing you as a client. Okay, how much does life insurance cost? Upon completing a life insurance application with a licensed agent, if your death benefit amount is for over $250,000, you may have to schedule a free PAR-Med exam either at the medical examiner's office or at your work or home residence. This exam typically takes between 20 and 30 minutes, where they gather a blood and urine sample, measure your heart rate, and have you answer a medical questionnaire, which is later evaluated by the insurance company. Results typically take about 2 weeks, but can take longer depending on how easily your medical records are to obtain. Depending on the results, you'll be given a rating which determines your monthly cost for the amount of coverage applied for. And if it's for universal life, the maximum illustration figures you qualify for. The higher the rating, the better the illustration. All insurance companies share this data, so if you're thinking about reapplying with a different company because you didn't like the results from your test, I can definitively tell you that you're just wasting your time. Additionally, some insurance companies are now using a system called LexisNexis instead of the PAR-Med exam, which gathers your data automatically from public records online. This method is faster, but usually less accurate. Alright, now let's get into the different types of insurance and how they compare. The first is called term life. It's the most basic and the most affordable. Policies can be purchased for a specified period of time, typically between 10 and 30-year term periods, or if you die within that term, the insurance company will pay your beneficiaries the face value of your policy. However, if you outlive the term period, you forfeit the policy and all your past premiums to the company. It's useful if you can only afford a low-cost option or you need life insurance only for a certain amount of time. It's typically purchased to cover a home mortgage or some other financial debt if the insured were to die before it's paid off, taking the potential financial burden off surviving family or other dependents. Some companies allow you to convert it to a whole life policy without any additional medical exam. It also may include one or more living benefits riders, such as terminal, critical, or chronic illness. We'll get into more about those a little later. Okay, the next is called whole life insurance. It's also known as permanent life insurance. It has a fixed premium cost that can either be tailored to pay only up to a certain age or until death, depending on the type of policy. Although the premiums may seem higher than the risk of death in early years, they can accumulate tax-free cash value by being passively or actively invested within the company's portfolio. You may also borrow funds from the cash value or surrender your policy for its face value if necessary. What are the different types of whole life insurance and how do they compare? The first is called final expense insurance. It's also known as burial insurance. It's designed to cover the medical and funeral costs after your death. Premiums are generally paid on a monthly or annual basis until the insured's death. The death benefit coverage is between $2,000 and $30,000. It can build cash value and may include the terminal illness rider. The next is called Universal Life. It has the greatest flexibility of all life insurance. Once money has accumulated in your cash value account, you may be able to vary the frequency as well as the amount of your premiums. It may be possible to structure your policy so that the invested cash value eventually covers your premium cost completely. Of course, it's important to remember that altering your premiums may decrease the value of your death benefit. It's available in a fixed GUL, an indexed IUL, or a variable VUL. We'll cover all of these options more in depth in Part 2 of our Life Insurance 101, Universal Life, which I invite you to check out after we finish Part 1. I'll also post a link of it up in the corner. Living benefits riders. Some life insurance companies allow you the ability to accelerate a percentage of your death benefit as needed while you're still alive with add-ons known as living benefits riders, or LBRs for short. Examples include the chronic illness rider. It covers you if you're permanently unable to perform at least 2 of the 6 activities of daily living, or ADLs, without assistance. These include bathing, dressing, ambulating, eating, continence, and toileting. The critical illness rider. It covers heart attack, cancer, stroke, major organ transplants, and kidney failure. And finally, the terminal illness rider. It covers you if you're diagnosed with a life expectancy of 24 months or less to live. It's important to note, some companies only offer it at 12 months or less. Make sure this is explained to you before purchasing. Additionally, some of the companies that offer these riders include them at no additional cost, while others are only available at an added premium. Furthermore, the payout percentages of these riders differ between the different companies who offer them, so it's recommended that you talk to a trusted broker who's contracted with several of these companies who can clearly explain the differences before you decide on which company to go with. It's also important to note that not all life insurance companies offer these extra benefits. Before purchasing, it's important to ask your broker if your policy includes any of these and have them explain the details of each in case you ever have a qualifying event. Here's some examples of other additional riders you can purchase. Just like in our annuities presentation, it's important to compare the financial ratings of life insurance companies that you're considering before choosing who to go with. I personally only recommend companies with an A rating or higher. These ratings can easily be looked up online as they are public record. You can easily save a few dollars each month or more taking the time to carefully shop around, but make sure they're all A-rated companies. I wouldn't trust a company's financial stability with a rating below that, even if they quote a cheaper rate. Additionally, company name isn't everything. Just because you're familiar with a company name, because you've seen it around on advertisements or what have you, it doesn't mean they offer the best plans. A good rule of thumb is, the more they spend on advertisements, the less they invest in their products. Some companies offer far more competitive products than others. Don't be fooled by life insurance ads on TV, radio, or online. They're usually by companies that have only been around for a short while, or just fronts for other companies with poor financial ratings. It's also a good idea to get quotes from a few top-rated companies before you decide on a purchase. And as always, it's highly advised you meet with a trusted life insurance broker contracted with several of these companies who can provide an unbiased comparison of their products before purchasing. Additionally, before working with a life insurance agent, it's a good idea to check their license number online. Here's a link to the California website. If you live in a different state, you can easily find the link online with a quick Google search. Once you look up an agent's license number, you can easily see if they're active, the companies they're appointed with, and how long they've had their license. Okay, how do agents get paid? With regards to term life and whole life policies, agents are generally paid directly by insurance companies, depending on their hierarchy and contract level, based off the death benefit and annualized premium of each policy they sell for that company. Some agents are paid a residual commission each time the policy premium is paid, while others are paid in part as a lump sum advance for annual expected premium. However, if a policy is canceled within 2 years of the start date, the agent is responsible for paying that commission back to the company. Some universal life policies commissions are paid out differently, which we'll cover in our next presentation in more detail. Additionally, some companies allow you to purchase a policy directly through them online or over the phone, which I don't recommend, because if you ever have a question or need to talk to someone about your policy, you don't have a personal point of contact like you would if you had an agent or a broker. It's just something to think about. Okay, I hope you have a little more confidence before shopping around for life insurance. Please remember to subscribe to our channel and check out our next video all about Universal Life to learn more about the fastest growing type of life policy on the market. Additionally, feel free to check us out online at setsailins.com to schedule a free consultation and to learn more about the additional services you might be interested in. Thanks for tuning in. We'll see you next time.